Welcome to Leading the Way, Strategies for Ports in an Uncertain World, a partnership podcast series created by Journal of Commerce custom content for adports.group. I'm Alessandra Barrett, Associate Director of Special Projects for Journal of Commerce by S&P Global. In this series, we examine the leadership opportunities that this moment presents for our industry, from sustainability to sourcing and the investment underneath it all. In our second episode, I'm joined by Group Chief Strategy and Growth Officer for adports.group, Ross Thompson, to discuss trade regionalization versus globalization. Welcome, Ross. Thanks for joining me today.
Thank you for having me.
Since the pandemic, supply chain management has changed. Regionalism, for example, has been adopted by more. What are your thoughts on how businesses can best embrace this change and even more maybe uncover the potential for their own activities that might exist within this moment?
Well, first of all, I think the title of the podcast says it all. We are living and operating in an uncertain world. And that's really been the case since the pandemic. But what I would say about that is, if you've been in the industry long enough, you'll know that these challenges have always been within the industry. So we've always faced global uncertainties, trade barriers, trade wars, conflict, geopolitical issues. They've always been very, very prevalent. I think what has happened over the last 2 years, specifically caused by the COVID crisis, was the phenomenon that we see of nearshoring. I think most supply chains prior to COVID were set up to deal with a lot of just-in-time deliveries. Since COVID, supply chains have been required to be much, much more robust, much more time responsive, be able to change routing of product en route, so flexibility in the supply chain, be able to slow down the supply chain, speed up the supply chain. These have all become, factors of robust supply chains which weren't previously there. If you layer that in with what we've seen from governments and the private sector, which has been since the pandemic, is to really bring a lot of their critical manufacturing and processing much closer to home. So bring in much more raw materials, store a greater quantity of those materials, but have that processing done either in country or very close to your country of consumption. And that is something that has continued since the pandemic and something that we'll see going forward.
What are the drawbacks?
What are the drawbacks? That's a good question. I think the answer to drawbacks is that I think that momentum from governments and private sector wanting to nearshore happened at a lot greater pace than the traditional supply chain was set up to cope with, right? And so you didn't have necessarily the storage infrastructure, the distribution infrastructure. You saw congestion, particularly in North America, for example. But I think that it took time for the industry to respond. And it took time for the industry to construct the infrastructure required and the robustness required, I think. What you have now is that is in place and is pretty seamless in today's supply chain environment.
But as you point out, the trade landscape it's forever evolving. We're always going to be facing some unknown. And so in the face of increasing nearshoring and regionalization, what are the strategies necessary to adapt?
Well, they've always been there. And I think our industry has become very, very adept at being flexible and being very agile to these changing trade patterns. I think what you have to do today is you really have to analyze where your customer base and your market segments and your trade partners that you deal with, where they are moving, what requirements that they have. Capital planning becomes very, very important in any business. The development of long-term assets, 20 to 25 to 50-year assets, such as ports, long-term warehousing, for example, rail networks, even maritime networks in shipping. the challenge is, how do you plan long term in the face of changing trade patterns? And that comes down to really working with your customer base, your market segments, with governments, being very, very close to them, spotting new trends through a huge amount of data analysis. And a lot of these new trends are sort of marching forward into virgin territory. They've never been seen before. And then aligning your capital expenditure program to cater for those changing needs. And that's something that's a skill. Then you have the issue of, you have existing infrastructure that needs to either change or adapt. You see now, for example, in lots of cases in Eastern Europe, because of the conflict between Ukraine and Russia, there are ports and there are trade routes that previously served a lot of tonnage that is now suffering. Now you have ports that were relatively small that now become the exit and entry gateways for this cargo as it moves to new routes, new possibilities. So it's always about challenging yourselves to look to the future and positioning your assets and your capital expenditure program to align with the changing face of trade.
Are there any blind spots, areas or technologies that aren't being paid the attention that you think they deserve?
I think it's good that you mentioned technology. It's something that I would say during the pandemic came very much to the forefront. I think many companies spent in 12 months on IT infrastructure and certainly digitization. I think that they spent, within a 12-month period, what they probably budgeted to spend in a 5 to 10-year cycle. It really did advance the industry significantly. So I think in terms of, it's not a blind spot. I think that is something that has come on with an accelerated investment by the industry. What I do see is there is still challenges in cross-border visibility in the supply chain. So it's still, if you go back to it, blockchain was talked about as an enabler of trade probably around the time the pandemic was here, and certainly in the subsequent 6 months after the pandemic. But blockchain relies on the fact that it needs transparency and exchange of information. And the number of players within the supply chain still makes it very, very difficult for the software side of our business to keep up from beginning to end. So in terms of hardware, it is possible to move goods completely without human intervention and completely without documentation from its origin. Let's use an example of China to its destination, and let's use an example of Europe. The hardware is all there. It's the software side and the interchanges, and particularly government interchanges, exchange between governments of information in the supply chain, that really hold us back from doing more in the digital side. So that is coming. It's a trend in the industry that continues to accelerate. But the challenge is always data security, the number of interchanges that you have in a supply chain, the number of players you have, the number of documents that need to be distributed. That all takes time to catch up, and the industry is still working on that. But I do see in the future a totally automated documentation process from beginning to end in any supply chain.
Globalization has facilitated a deep level of interconnectedness. It's been crucial to developing high-value supply chains. What are your thoughts on how these global trade connections can be best preserved and managed? What needs to be known to better leverage those connections?
I think globalization is certainly here to stay. I think we do live and we work in a globalized economy, and that globalized economy has brought a huge amount of benefits. It's also brought a huge amount of supply chain requirements, but also challenges. Now, there are changing dynamics in the world. I think that when we originally spoke about regionalisation rather than globalisation, I think if you look at areas of the world, particularly areas like the Middle East, where I work, you're at the infancy of the industrialization of these economies. They're very wealthy economies. They're diversifying their economies away from just oil production or gas production. They are attracting globalized manufacturing bases within the region. And that brings with it all the supply chain activities that you need to service industry. Now, what do you need in an ecosystem with it, whether it be globalization or regionalization? Firstly, you need a global network. You need access to trade routes, whether that be through the sea, through air, through rail, through truck. You need access to this, and that has to be in place. You need globalized infrastructure, and infrastructure needs to be continually invested in almost every region of the world. I don't think there's really a region of the world that can sit on its laurels and not invest in port infrastructure, in airport infrastructure, in rail infrastructure, in road infrastructure. This has to be at the heart of driving global trade. The companies that are involved in this sector, these are the companies that are prepared to outlay significant sums of upfront capital to take long-term returns and to enable supply chains. So if you take a step back from that, companies and governments can only do that if the financing sector is available to invest, to provide debt to these companies in order for them to invest. So these are keys for the globalized economy and even the regional economy to keep moving. I think then as you move forward in that, we always have to look at how do you make trade easier? How do you eliminate red tape? How do you eliminate bureaucracy? And I think that despite the geopolitical issues and some trade challenges between certain nations, a lot of governments and countries are working together to initiate free trade agreements. And these have to be in place to allow for goods to move easily and cost effectively. So there are many layers to building globalized and regionalized supply chains. I still think the industry needs to provide greater density of services, particularly in the maritime sector, greater selection of shipping routes, a little bit greater selection of choice for the industry. These are things that are coming and have to be in place to support globalized and regionalized trade.
So, how can companies identify and then strike the right balance between regionalization and globalization? What would your advice be in thinking about that topic?
It all comes from market demand, and it also comes from where governments are investing and when private companies are investing too. But it all stems from demand from the industry. And I think if the demand is there, the ability for companies and governments to invest long term will always support. And I think that's the driver of any real investment, is the sustained demand and the ability to make returns on the capital that you invest and to return either to your shareholder or to your government.
Coming back to something that you mentioned a bit earlier, the World Trade Organization predicted 1% growth in global trade volumes for 2023. What challenges does this present for developing markets?
Yeah, and that's a globalized number. And I think if you split it down, there are huge differences between regions of the world. So what you see certainly in the Middle East and the subcontinent areas, parts of Africa, these will grow at a lot higher rates than the 1%. And we're talking 4-5%. So these are economic areas that are doing very, very well. I think the lower growth rates are going to come in the more traditional westernized markets. I think North America, Europe will have lower growth rates than some of these areas. And that really presents challenges, because if the demand, as I go back to it, if the demand isn't there, it's very hard for private companies and even governments to make the investments needed in order to facilitate the trade. Now, if you look at a port, for example, ports will typically invest over a 25-year period, not just on the infrastructure side, that tends to be a little bit longer, 25 to 50 years. But if you look at the equipment needed, cranes, RTGs, these tend to be invested over a 25-year period. It's very hard to justify those investments if the growth rates start to decline. So then you're left with a choice. Well, what do we do in that situation? You can look at extending the life of your existing assets, or you can look forward to a time where you can predict that actually the demand will come back. But I think what you'll see is a lot of companies will start switching their investments away from the low growth markets into higher growth opportunity markets. So in the economies that I mentioned, I suggest you're going to see much more investment at a greater pace than maybe you are in certain other areas of the world.
Looking forward, what activities or areas in the business are you most curious about? What holds the most potential for?
I think 2024 will have its challenges. I think 2023 had its challenges. We are facing all the economies that are facing headwinds and the challenges that still exist in the global supply chain environment. Having said that, in challenge, there's always opportunity. And I think the opportunity, we are seeing certain market sectors coming into a really, really boom cycle. So if you look at the sort of offshore maritime sector, the offshore oil and gas sector, energy sector, the automotive sector, the RoRo sector, all of these sectors are displaying significant growth and will do for the short term. So the next 2 to 3 years and even up to 5 years. You're going to get slower growth rates in sort of the container side of our industry, but there are certainly great opportunities within the industry in particular. We're also seeing development of trade routes in areas of the world that we traditionally haven't seen before. So trade growth through the CIS countries is growing at a significant pace. Developing economies such as parts of Africa, as I said, the Middle East will be a big growth market. These are all exciting areas for our industry to invest in and also to present their clients or customers and their market sectors that they serve supply chain solutions that will be needed going forward. On the whole, I think if you work in our industry long enough, you become quite robust. Most of the sort of management teams around, they've been through many up cycles and many down cycles. I think the industry is in relatively good hands from the leadership teams across all the sectors. They're very experienced. We are coming off of a 2.5-year period, sort of during and post-COVID, where there was a lot of revenue gains in the industry, which has given many companies the backbone of financial health to invest and ride out some of the challenges that we see. I think our industry has always risen to challenges, has always been adaptable, and always finds its way to service the trade. Trade is like water, it will find a route, and our job is to see where that route is coming and provide the assets and the services required in order to enable it.
It's really been a pleasure speaking with you today, Ross. Thanks for joining me.
You're very welcome. Thank you so much.
Thanks for joining us today. This has been Leading the Way, Strategies for Ports in an Uncertain World, a partnership podcast series created by Journal of Commerce Custom Content for Adports Group. I've been your host, Alessandra Barrett.
Journal of Commerce Custom Content is a division of S&P Global. The Journal of Commerce newsroom was not involved in the creation of this content.